Hey there, my name is Brennan. I'm 25 years old and I teach Canadians how to invest their money. So, a common question that I get asked is how much should I be investing? The answer is it really depends on your personal situation, how much you can afford to invest, and how early you want to retire. But I'm going to go through an actual example of my wife and I to give you a sense of, how much we're investing. So our combined income is about approximately around $112,500, and we have a goal to invest a third of that. So that's our gross income before taxes, and so if we divide that by three, 37,500 is the number that we strive to invest for. We pay approximately a third, a bit less in taxes, and then we live off of a third. So basically, around 37,500 goes to taxes, 37,500 we're living off of, and then 37,500 we're investing. Now, I'm a big advocate of dollar cost averaging. That's an investing strategy where you invest on a regular basis, regardless of if the market's up or down. And studies show that over the long term, you're rather than trying to time the market and determine, okay, is it a good time to buy or a good time to sell, and trying to figure out dollar cost averaging is you just put on autopilot, you invest on a regular basis over the course of 10, 20, or 30 years, buying at all costs, and studies show that that is actually a way that you come out on top. Even though you're buying it high, you're also buying it low, so it takes a lot of the thinking out of it. So we buy on a weekly basis, and so if we divide this by 52 weeks in a year, we get around $721. So that's how much we're actually investing every single week. Now, the next question people ask me is, well, what should I actually be investing my money into? So on my TikTok page, I have a link to my website. You can actually download my free guide for how to get started investing. But in the top right-hand corner, I have a link called Wealthsimple Sign Up. This will bring you to an accredited investing platform in Canada here called Wealthsimple. Probably have heard of it. When you sign up with my link, you get a free welcome bonus. And Wealthsimple is an incredibly easy way to invest your money. They have a lot of automation, so you can set up weekly withdrawals from your bank account and then invest. And then you're able to actually take the money out of Wealthsimple at any time as well. Although I would recommend keeping it in there for, like I said, 10, 15, 20, 30 years. So once you set up Wealthsimple, then you're into the investing platform. And so if you think about how you go to a bank to get a credit card and a checking account, a savings account, and a debit card, you open up an investment brokerage account to open up investing accounts, like a tax-free savings account or an RSP. So on my website, I have that How to Get Started Investing guide. I actually break down all these different accounts and the pros and cons and when to use them and how to use them. But just to keep things simple for this video, I'll show you my holdings here. So VFV, this is the largest 500 companies in the US. And VFV is an ETF, which stands for Exchange Traded Fund. And it's essentially a basket of stocks, a basket of companies. And so when you buy VFE, you're buying 500 of the largest companies all in one go. You could individually buy Costco, Walmart, Apple, Microsoft, Tesla, all those individual stocks, but buying VFE just buys it all in one package for you, so it's a lot easier. Then in Wealthsimple, you're able to click buy and then choose which account you want, and then you can, instead of doing a market buy, which is just buying right now whatever price it's available at, you'd set up a recurring buy and then choose to invest, in our case, $721 on a weekly basis. And then this will withdraw from your bank account and kind of do all the work for you with no fees. There are very small fund fees in VFE. I believe it's like 0.6% or 0.8%, something very, very low. But that's exactly what my wife and I do in terms of we calculate how much money do we make, what's our goal to invest, how much we're going to invest weekly, and then in Wealthsimple we just set that up. And as you can see here, with VFE we've made $11,426. We've had a 21.58% return. VFE over the last 100 years has returned around 9% annually. And so, of course, during years like COVID or even other kind of stock market downturns, of course, the market goes down, 5, 10, 20%, but then in other years it goes up incredibly. And so over the last 100 years on average, and even over the last 10 years, it's like a 14% annual return. But over the last 100 years, around 9%. So VFE is an incredible investment, the thing to be aware though is that there's a lot of volatility in it. What that means is that your money will fluctuate. And so as we can see right before COVID here, there was then a huge decline. Then also here in early 2022, then we faced a huge decline throughout 2022. But as you can see, the market always does go back up. And so the thing about investing is that although on March 17th your money would show that it's down significantly, you actually haven't lost any money. It's only when you sell that you lock in that loss. But if you were to, let's say, buy on August 27th or September, and then just kept holding, it would look like you made a lot, it would look like your money went down, and if you just keep holding though, over time, it's only when you actually sell that then you lock in either that gain or that loss, and then you would pay taxes on the income. Now, if you do it within a tax-free savings account or an RSP account, that's where there's those tax advantages. So much information to pack in. I also do offer paid coaching calls for people who are interested. But like I said, I do have a lot of free information on my website. I have over 5 hours of content on TikTok for free. And then on my website, you can sign up for my guide completely free as well. So really trying to give as much free information as I can out there, but then I do recognize that some people do want to sit down and kind of walk through their situation and ask more questions, and I'm happy to offer that as well. This is a really great resource I like. It's called calculatorsoup.com, and you can just Google it. They have a future value calculator. So if we plug in that we're starting with, let's just say $0 today, we're investing for 20 years or 20 periods, we're expecting a 9% return rate based on the S&P 500 historical returns for the last 100 years. And we're investing $721 52 times a year, so $721 weekly for 20 years. That would bring us to just over $2 million after 20 years.